The main focus is going to be on the so-called GLOBE rules. So that is the Global Anti-Base Erosion rules that are the cornerstone of Pillar 2. And the key elements of that, so is a group within the GLOBE rules, who are the members, and where are the entities that make up the multinational group for this purpose. Secondly, what is the effective tax rate of each constituent entity? Thirdly, how do we work out whether it is below this agreed minimum 15% tax rate? And if so, how do we work out what the additional tax is to be paid? And finally, how is the tax to be imposed on the group? We saw that the income inclusion rule allocates the top-up tax to the ultimate parent entity. The backup mechanism, which is in Article 2, is the undertaxed payments rule. So if there is low tax income, which is effectively attributed to or beneficially owned by the ultimate parent entity that is not brought into charge, then the undertaxed payment rule will impose the top-up tax on all of the entities in the jurisdictions where the top-up tax rule is actually imposed. Once we've worked out the top-up tax for the jurisdiction, we then have to allocate it back to each constituent entity. And this means taking the top-up tax percentage for the whole jurisdiction, apply that to the excess profits of the jurisdiction, deduct any local minimum top-up tax that is imposed, and then we allocate that to each of the constituent entities in proportion to their GLOBE income. So the top-up tax is then allocated back to each entity in order to work out who it's to be paid to.